Real estate versus stocks. Now, I know what you're thinking. Real estate is the safe bet, right? Well, hold on to your hats because I'm about to challenge that notion. Let's start with some cold, hard facts. On average, depending on where you are based, real estate returns anywhere on average between 7% to 11% a year. Not bad, but here's what you're missing. Trending stocks have averaged us a decent 30% annually, nearly triple the return. Now, I'm not saying you should ditch real estate entirely, but if you're not including stocks in your portfolio, you're absolutely leaving money on the table. You can simply invest in real estate through the stock market. Real estate is one of the 11 sectors in the stock market, giving us access to strong stocks during growth periods, like we are in right now. The real estate sector has climbed 41% since last year and is not showing signs of slowing down. In this recording, I've actually got 3 hidden gems from the real estate sector that deserve your attention. These aren't just any stocks, they're companies that have proven themselves time and time again. Let's kick things off with our first pick, CubeSmart, ticker symbol CUBE. Now, if you're not familiar with CubeSmart, let me give you the lowdown. This company is a real estate investment trust that's all about self-storage. They acquire, own, and manage self-storage facilities across the United States. Now, think about it. In our consumer-driven society, people are always looking for places to store their stuff. It's a business model that just makes sense. CubeSmart is set to report its Q2 2024 earnings on October 31st. Wall Street analysts are expecting an EPS of 68 cents, which is unchanged from the previous year. Now, you might be thinking, no growth. Why should I care? But here's where it gets interesting. The company's quarterly revenue is expected to be a massive $263 million. Yes, that's a slight dip from $267 million in the previous period, but in this economic climate, holding steady is a win. Now, let's talk about long-term performance because that's where CubeSmart really shines. If you had invested $1,000 in CubeSmart at its IPO about 20 years ago, you could have bought around 60 shares at $16.73 each. Today, these shares are trading at $51.96. Do the maths and you'll see your investment would have grown to over $3,000, $3,106 to be precise, just from stock appreciation alone. But wait, there's more. CubeSmart has been paying dividends all this time. Currently, CubeSmart's dividend yield is sitting pretty at 3.93%. Over the last 2 decades, they've paid out about $19.28 in dividends per share. For our hypothetical 60 shares, that's an additional $1,152 in your pocket. Add it all up, and your $1,000 initial investment would now be worth $4,258. That's a total return of 325.8%. We're looking at stability and steady growth here. CubeSmart has shown it can weather economic storms and come out strong. And also, as part of a portfolio of profitable stocks, CubeSmart will deliver for you to outperform the S&P 500. Okay, let's look at CubeSmart's performance over the years. After its IPO in October 2024 and a slow start, just like most IPOs, the stock eventually went on its first uptrend between 2009 and 2016. It climbed an incredible 2,450% from $1.34 to $33.52. So CubeSmart has a proven performance history of delivering returns. After that, it went sideways until January 2021 when it took off again, climbing 58% to its all-time high of $57.34 in December 2021. Now, here's where it gets interesting for us as investors. The stock declined 42% to a low of $33.17 in October 2023. It formed a base, which is what we want to see when a strong company is going at a discount, and also a key signal for us when we are looking to buy a stock. A base is where the next major uptrend will start from, so identifying them is essential. Then in August 2024, CubeSmart eventually broke out from this base and has climbed 10% since. So when should you buy? Well, keep an eye on this trend. If the stock continues to move above previous highs in this trend, it'll offer some excellent entry points and profits in the run up to its current all-time high. And if it breaks through the all-time high, then it will likely target $100 over the next 12 months. Getting in now while the stock is going at a discount could prove to be a very smart investment, but do make sure you manage your risk and exit well. We typically risk no more than 2% per position and have a stop loss on every single position without fail. Now, let's move on to our second pick, Public Storage, ticker symbol PSA. This is actually the granddaddy of self-storage companies. Founded in 1972, Public Storage has grown to become the largest brand of self-storage services in the US. We're talking about more than 2,200 locations across the US, Canada, and Europe. Now, that's a lot of storage. Public Storage has a market cap of $62 billion, making it the 303rd most valuable company by market cap. Looking at its performance since the 2008 market crash, Public Storage has been a beast. Between its 2009 low and its 2016 high, the stock climbed 510% from $45.35 to $277.60. It then consolidated until March 2021, which is exactly what we like to see, a strong company taking a breather before its next run up. And run it certainly did. It broke out in April 2021 and climbed another 52% to its current all-time high of $421.76. Now, here's where it gets interesting for us as investors. The stock declined by 45% to $276.11 in October 2023 and then consolidated until July 2024. As investors that focus on medium to long-term trends, we look for this kind of setup, a strong company pulled back and ready to spring. And true to form, it broke out in August 2024 and has climbed 13.5% since. It's working its way back to its all-time high, which is 17% away and so still has plenty of room for growth. Now, when should you consider buying? Like with CubeSmart, watch for the stock to continue moving above previous highs in this current trend. These will be your entry points. And if it breaks through the all-time high, then it will likely target $500 and even $1,000 over the long term. Okay, now let's talk about our third pick, Extra Space Storage, ticker symbol EXR. Founded in 1977, Extra Space Storage is another heavyweight in the self-storage world. As of March 2024, they owned or operated 3,714 locations across 43 states. We're talking about 2.6 million units and 283.4 million square feet of rentable space. Now, again, that's a lot of storage. Extra Space Storage went public in 2004 and currently has a market cap of $39 billion, making it the 524th most valuable company by market cap globally. But again, here's where it gets really interesting. Between March 2009 and September 2019, the stock climbed an astounding 2,600% from $6 to $124. After consolidating until January 2021, it broke out in February and climbed another 84% to its all-time high of $229. Now, here's where we start licking our lips as investors. The stock dropped 56% to a low of $101 in November 2023. It then formed a base until July 2024, exactly what we want to see because, as already touched upon, trends start from bases, and identifying the start of trends early means catching the whole uptrend and maximizing profit. It broke out in August 2024 and has climbed 4% since. This is a golden opportunity, folks. We're right at the base of the breakout compared to CubeSmart, which has moved 10%, and Public Storage, which has climbed 13.5%, which means plenty of room for profit. If it does break through the all-time high at around $230, then it is likely to target $500 over the long term. These three real estate stocks are currently trading at a discount and are much lower than their all-time highs and are poised to rise back to those high levels. In this video, I discussed three more stocks that are also going at a discount and showing strong signs of moving back to their own all-time highs, offering you the chance to catch the big moves early and profit for the potential bull rally.